Good evening and welcome to my end of the week recap video here for the S&P 500 and plan ahead for the rest of for next week. Sorry. Real quick, I had to manage my way out of these 292 calls here from Wednesday. Added at 168, added at 128. Once the hourly put in an inside bar here and started breaking down below the opening range, I had to bail. Once that trade told me that I was obviously wrong, I did have to eat that loss. A little bit larger than what I really wanted to plan on. Sometimes that happens, kind of sucks, but it is what it is. End of the day, there was a nice bounce off here around the 50 SMA. I was trying to trade the SPX, did not work out in that as well. So this week for the S&P 500, SPX wasn't that great for me. So just have to take it easy next week, readjust, see what's going on with price action, be a little bit more picky about what I actually put my money at risk in. But I'm still going to take my trades. So with that said, what I will be looking for is a base to set up here at the 50 SMA. Also at prior all-time highs is 286.65, 286.70-ish area. I want to get some of these lines off here because they're not important to me anymore. Plus, it also jumbles up the chart a little bit, so looks a little bit cleaner. And now we can move forward. Looking for a base to set up here, maybe inverted head and shoulders, probably going to be more of a broadening wedge type of pattern or a channel that breaks like what happened over here. I have this line drawn right here. If price action pierces this line, about 288.5, probably on Monday, simply implies that the bearish pressure is subsiding and we're going to set up into a base. Who knows, may even have a little bit of a V reversal that started here at the end of the day. What is most evident is the amount of volume that has come in these last 2 days in what I would consider an area of demand. What do I mean by that? Well, we're just above a prior all-time high. In Technical Analysis 101, you learn that a prior resistance once broken and closed above becomes support, and vice versa. A prior support once broken and closed below becomes resistance. So operating under the thesis that this prior all-time high is support, I would want to see participation at that level. Well, how do you identify participation? Volume. Volume tells you there are trades going on at a significant level. If you have volume, i.e. participation at the 50 SMA alone, is usually significant enough to warrant a long trade. Couple that with prior all-time highs, prior low, prior broadening pattern. There's a lot of bullish plans going in play right here to at least bring in some participation. Now, as I've said in the past, algos do like to identify liquidity and rip through those areas and reverse and go back the other way. So what could happen here, we could have a dip and rip right back up through it, back up to prior all-time highs. Just have to wait and see for that. But what is most evident, as I've already said, volume, volume, volume equals participation. Okay, so initial plan here, 287 calls, about 4 weeks in the future. To get into that, I want to see a break above this little bit of consolidation here into the close, basically a move above 288.5. Total risk is going to be about 286. So anywhere in between here, I'd be happy to start and then build in between, stop just below, and see what happens. If we do fail this prior all-time high, we are in for a little bit more of a pullback. How far? I don't know. Maybe if I had to pick another spot, I'd say 280. But that's just a test of a prior breakout area, prior technical buy area, a little bit of consolidation. So it may come back and test there. I don't see that being too likely, but it's not impossible. So it's technically could be possible. Below there is the 200 SMA, and I will buy as many calls as I can at the 200 SMA if it comes down there. Price action still is overall bullish. I want to zoom out here on the weekly time frame and look at when we had prior outside weeks on the weekly time frame, bearish outside weeks, excuse me. So as you zoom back out, all the way back into, I went back as far as 2003. Arrows denote where there was an outside week, meaning a bearish engulfing bar, and what happened afterwards. The vast majority of them led to chop, with the exception of a few If you don't include 2007, 2008, because everything was just trash then, and the economy was doing well. It's just a lot of financial ruin, housing market, all that stuff, blah blah blah. We know what happened in those years. So, with the exception of those years, the only significant dip was in 2015, and that was a 30-point drop, which rallied in less than we'll call it a full year, right back up to all-time highs. So a year may be too long for some people to trade, but if you timed it just right, or if you played your supports just as you normally do, you would have had some tremendous, tremendous, tremendous opportunities to make some money. So just because we had a bearish outside week does not mean the market is crashing. If you are one of those technical analysts, excuse me, that are throwing up all kinds of bearish flags, pennants, wedges, duck, duck, goose patterns, whatever the hell you want to call them, I wish you the best of luck. I may not agree with you, but I still wish you luck. I'm still going to continue to take my trades and my plans, and I'll probably come out ahead of you. So with all that in mind, this is my trade plan. This is my analysis for the S&P 500. Real quick before I do go, I want to pull up the E-mini futures again. All these arrows, if you remember from my last video, are where volume was coming in on at price, all still coming in on lows. Weekly was again another outside week here on the E-mini futures. Daily time frame, huge, huge, huge amount of volume, and again at the 50 period, 50 period simple moving average and prior all-time high. So you have participation at an extremely significant level in an uptrend. If you do not consider this a support, I feel very, very sorry for you, and I wish you the best of luck again with your duck, duck, goose pattern. I will continue to trade it bullishly. So that's my trade plan. Those are my ideas. Those are my thoughts. If you have any questions or comments or concerns, please feel free to leave them down below. Have a good weekend and good luck.